This show is part of OnePlace, a daily network of focused briefings across the stories people follow most.
Welcome to the program. I'm here with the latest updates on global energy markets, major corporate shifts in the automotive and airline sectors, and a significant overhaul coming to the UK's national lottery.
The IEA warns conflict is wiping out global oil demand.
BP expects exceptional profits as crude oil prices soar higher.
Ford's CEO calls Chinese car exports devastating for American industry.
United Airlines explores a massive merger with rival American Airlines.
The FTSE 100 edges lower amid ongoing Middle East uncertainty.
The American Midwest emerges as a major hub for AI.
HSBC warns that regional conflict is hitting global business confidence.
The National Lottery brings Powerball jackpots to the United Kingdom.
First, the energy outlook.
The International Energy Agency has just released a sobering report regarding the state of global oil demand. Because of the ongoing conflict involving Iran, the IEA has significantly cut its forecasts for the year. They are now predicting that oil demand will actually fall by 80,000 barrels per day in 2026. This is a massive swing from just last month, when they expected demand to rise by 640,000 barrels per day. If this prediction holds true, it would mark the first annual decline in oil demand since the height of the pandemic in 2200. The agency notes that high prices and supply scarcity are starting to cause real demand destruction across the globe.
It is not just a demand issue, though. The supply side is facing historic disruptions. The IEA reported that global oil supply plummeted by over 10 million barrels per day in March. This is largely due to attacks on energy infrastructure and severe restrictions on tanker movements through the Strait of Hormuz. The report suggests that if regular deliveries don't resume by mid-year, the global economy needs to brace for even more significant disruptions. Interestingly, while oil is in turmoil, the European steel industry is seeing a glimmer of hope. New measures to double tariffs on cheap imports, particularly from China, are being hailed as a move that could pull the domestic steel industry back from the brink of total collapse.
Next up, BP's performance.
While the IEA worries about demand, the oil giant BP is seeing a different side of the coin. The company has upgraded its first quarter guidance, describing its oil trading results as exceptional. This is a direct result of the extreme volatility and soaring crude costs triggered by the conflict in the Middle East. Since the end of February, oil prices have surged by more than 60%. Brent crude even touched $120 a barrel at one point. For a company like BP, these price swings are incredibly impactful. They estimate that every single dollar movement in the price of a barrel of oil results in a $340 million impact on their pre-tax operating profits.
It is a stark contrast to the end of 2025, which BP described as a weak period for their trading division. Now, the market conditions are characterized by heightened volatility in not just crude oil, but also natural gas and refined products. However, it is not all pure profit. BP also noted that their net debt is expected to increase significantly, potentially reaching up to $27 billion. This rise in debt is partly due to working capital movements and the impact of price lags during this volatile period. Investors are keeping a close eye on April 28th, which is when the firm will officially report its full first quarter figures. The sheer scale of the profit impact from these geopolitical tensions is truly remarkable.
Now to the auto industry.
Ford's CEO Jim Farley is sounding a very loud alarm about the threat of Chinese automakers entering the United States market. In a recent interview, he described the potential arrival of these companies as devastating for the American car industry. Farley pointed out that China currently has enough manufacturing capacity to cover every single vehicle sale in the U.S. He argues that manufacturing is the heart and soul of the country, and losing that to Chinese exports would be an economic disaster. He is even calling for a total ban on their entry, citing not just economic competition, but also significant cybersecurity and privacy risks. He mentioned that these modern vehicles are equipped with numerous cameras that can collect vast amounts of sensitive data.
What makes Farley's comment so interesting is his admitted respect for the quality of Chinese electric vehicles. He has previously called the ascent of the Chinese EV industry the most humbling thing he has ever seen, even stating that their products are far superior to those in the West. He even confessed to driving a Xiaomi SU7 electric sedan for 6 months and found it difficult to give up. Currently, Chinese EVs are largely kept out of the US by massive tariffs, which reached nearly 250% during recent trade tensions. Farley believes that companies like BYD and Geely represent a level of competition that Western giants like Ford, GM, and even Tesla are currently struggling to match in terms of product strength.
Moving to the airlines.
There is a massive potential shakeup brewing in the skies. Reports have surfaced that United Airlines CEO Scott Kirby has been pitching the idea of a merger with American Airlines to various government officials. If such a deal were to actually happen, it would create the largest carrier in the United States by a significant margin. This kind of tie-up would have enormous ramifications for competition across the entire aviation industry. We would likely see a complete redrawing of major airline hubs, particularly at busy airports like Chicago O'Hare and Dallas-Fort Worth. While it is still in the very early stages of being floated as a possibility, the mere suggestion of merging two of the big three U.S. carriers is sending shockwaves through the sector.
A merger of this scale would undoubtedly face intense scrutiny from antitrust regulators. The Biden administration has already shown a very skeptical eye toward consolidation in the airline industry, as seen in their successful block of the JetBlue and Spirit merger. Combining United and American would consolidate a massive portion of the domestic market under one roof, which critics argue could lead to higher fares and fewer choices for travelers. However, proponents might argue that it would create a more stable and efficient global competitor. For now, it remains a bold proposal from Kirby, but it highlights the extreme pressures and strategic shifts currently being considered as airlines navigate a complex post-pandemic landscape and rising operational costs across their entire networks.
Let's check the markets.
The London stock market felt the weight of geopolitical tension on Monday. The FTSE 100 closed slightly lower as hopes for a quick resolution to the Middle East conflict faded. Negotiations in Pakistan between U.S. and Iranian delegations ended without a deal, which immediately sent oil prices back above the $100 mark. The situation escalated further when the U.S. announced a naval blockade of the Strait of Hormuz, a critical passage for 20% of the world's oil and gas. This blockade is being enforced against all vessels entering or departing Iranian ports. This move by the U.S. administration has added a fresh layer of uncertainty for investors, who were previously hoping that the conflict might be nearing an end by the summer months.
Market analysts are noting that the reopening of the Strait of Hormuz is the absolute key requirement for any sustainable rally in risky assets. While oil prices have jumped, they haven't yet returned to their absolute highs of over $111, which has prevented a total sell-off in the equities market. There is still a lingering hope among some traders that the peace talks are a process rather than a single failed event. However, the immediate reality is a partial blockade and a very tense standoff. The FTSE 100 ended the day down about 17 points, reflecting this cautious and somewhat pessimistic mood. Investors are essentially in a wait-and-see mode, watching for any signs of a diplomatic breakthrough that could stabilize energy flows.
Shifting to tech infrastructure.
The map of America's digital infrastructure is being redrawn by the AI boom. For a long time, Northern Virginia was the undisputed center of the data center world. But a new report shows that the Midwest and Texas are rapidly becoming the new hubs for the massive facilities needed for cloud and AI computing. By the end of 2005, these two regions already accounted for a third of all hyperscale data center capacity. Even more telling is that they are expected to host over 50% of all new capacity coming online in the next few years. The primary driver for this shift is simple: power. These enormous AI models require staggering amounts of electricity, and companies are heading inland to find regions where the power grid can actually support them.
States like Wisconsin, Indiana, and Ohio are leading this Midwestern surge. We are seeing massive investments from the biggest names in tech, including Microsoft, Google, and Amazon. In Texas, some data centers are even taking matters into their own hands with a bring-your-own-power approach. They are building their own on-site natural gas power plants to avoid straining the local grid entirely. This massive build-out is raising concerns about rising electricity costs for regular residents, but the momentum seems unstoppable. Ohio has been particularly aggressive in attracting these projects, offering property tax abatements lasting up to 30 years. It is a fundamental shift in where the physical heart of the internet resides, moving away from the coast and into the American heartland to fuel the next generation of AI.
Next, a banking perspective.
HSBC's leadership is expressing deep concern over how the ongoing conflict in the Middle East is eroding global economic confidence. Chief Executive George L. Heddery noted that the uncertainty is starting to weigh on business sentiment far beyond the immediate region. He warned that a prolonged conflict could impact the global prices of not just oil, but also essential goods like fertilizers and metals. This is particularly significant for HSBC, as it is one of the European banks most exposed to the Middle East, with the region accounting for about 4% of its pre-tax profit. While they haven't seen a massive flight of capital yet, there are reports of wealthy investors in the region looking at relocating their assets to hubs like Singapore or Hong Kong as a precaution.
The bank's chair, Brendan Nelson, echoed these sentiments, emphasizing that a peace deal is essential for the resumption of global energy flows. He pointed out that oil-driven inflation remains one of the biggest risks to the world economy right now. We are already seeing the ripple effects in other sectors. For instance, the recruitment firm Page Group has cited the conflict as a reason for an increasingly uncertain outlook for the rest of the year. Even consumer goods companies like Imperial Brands are flagging a more difficult geopolitical environment. The consensus among these business leaders is that the longer the disruption continues, the more the indirect effects will seep into every corner of the global market, making it harder for businesses to plan for the long term.
Finally, the National Lottery.
The UK's National Lottery is about to undergo its biggest transformation since it launched back in 1994. The operator, Allwyn, has struck a deal to bring the famous American Powerball game to Britain. This will allow UK players to compete for massive shared jackpots that can exceed £1 billion. Tickets for this new game will cost £4 per line, and winners would receive their payouts over a 30-year period. This is a major move to modernize the lottery and bring in a new level of excitement with these mega jackpots. Beyond the new game, the main lotto draw is also getting a significant overhaul. Starting in June, players will be given 2 chances to win for every £2 ticket they purchase, which is a first for the draw.
This change to the main draw is expected to more than double the number of lotto millionaires created each year, jumping from around 140 to nearly 350. Allwyn's CEO, Andrea Vidler, says these changes are part of a promise to bring more innovation and entertainment to the lottery. The company recently finished a massive £450 million tech upgrade to handle these new features and the billions of historical transactions. Importantly, these new games are also designed to boost the money going to good causes. For the new Powerball draw, over 30% of the ticket price will go toward charitable funding. It is a bold attempt to return the magic to the lottery and keep it as a central part of the national conversation.
That's our look at the stories shaping the day. Join us again tomorrow for more focused briefings. For now, have a great day.